Although this indicator is called initial balance, and initial balance is typically referred to as, or typically considered the first 60 minutes of trading. This vertical line here would represent the first 60 minutes of trading for each session. Here it is again, and that's what typically the initial balance is considered. Creating an indicator that just plots the initial 60-minute is quite limiting in terms of just identifying that range, and so to speak a waste of easy language or a waste of programming, in my opinion, particularly if it's an indicator that one of our clients wants to purchase. We like to provide a little bit more additional uh, usage to it. So what we did was, first of all, provide two different methods of plotting the initial balance, which you could toggle on and off between, back and forth between whichever type you want. This particular one draws the horizontal line showing the initial balance as it's developing, and then this one here identifies that developing initial balance. So, for example, when it was at the initial balance was here, then this vertical trend line would have just been right here. Then as the initial balance expands, so does this vertical line. So you have two options of plotting them horizontally and vertically, or you can combine them together. Here you can see both of them combined together on the chart. Let's do this so it's a little bit easier to see. So you have them combined here. Now, like I said earlier, initial balance, I'm not sure why I have this chart set to, let's make it 30 minutes, set to 25. It doesn't really matter what interval you're using, as long as the interval you're using is less than your initial balance time period. So if this is based on 60 minutes, you can't use a 120-minute chart, because then you would have to look for the range inside the bar, and that becomes a little bit more complicated in terms of coding. So, uh, like I said earlier, if we just provide this in, this is if you just wanted to identify the initial balance hard coded as a 60 minutes, then this indicator would be quite limiting, and also true, a lot of market profile users use the 60-minute initial balance, but there's a lot of traders that consider the 15-minute range important as well. Some consider the 90-minute range important. So, for example, here, so if we just hard coded this to the initial balance for market profiles, in other words, based on 60 minutes, it would be quite limiting. Here's a 5-minute chart that is showing us a 90-minute range. So this would be the initial 90-minute balance, initial balance of the, based on a time period of 90. So we equip this with an input where you could enter your initial balance time period in terms of minutes. So if you want to look at a 5-minute initial balance, or 10-minute, or 20-minute, or 30-minute, 50, 60, 70, etc., just keep going. As long as it's smaller than one session, as long as it's less than or equal to the the range of the minutes within a session, then this indicator will apply. This makes the indicator a lot more versatile, and it makes it useful for somebody who wants to take a look at the first 60-minute initial balance. Somebody might be interested in 90-minute, as this one here is depicting the 90-minute initial balance. And this particular chart here, I'm showing these on 5-minute, but it really doesn't matter. This could have been a 1-minute chart, 2, 3-minute chart. Here we have the 15-minute range. So this would be the range of the initial 15 minutes of trading. So this would be, in other words, initial balance of 15 minutes of trading. Also, to make this useful, so you can do research, because I do believe in the I do believe in the importance of the initial range, because that's where we get, and I believe that it is a very good indicator that we can use to determine directional bias. So I completely believe in the initial balance theory, and in terms of which you want to use, 60 minutes, 15 minutes, 90 minutes, 30 minutes, etc. That I would recommend that you do your own research and determine that. Um, that's why we also provided the functions where it identifies the initial balance high, initial balance low, and of course you can use those functions to determine what the initial balance range is, as well as you can use it to do back testing. So you can figure out, so in other words, instead of just offering an indicator which is quite generic, just showing you a 60-minute initial balance, provided the functions for you, provided the ability to create different time period initial balances based on whatever time period you want to enter, as well as the functions, so you could do some hardcore research. Whether you want to do it manually, just put up your charts, which is always, I always suggest that. I always suggest both, doing an initial backtesting automated, and then taking those results and then dicing them, going over them, in other words, manually, because when you go over them manually, that's when you begin to spot nuances. And I highly recommend anybody who just wants to do a computerized backtesting and get their full results from that, they'll miss a lot of little nuances, and will not completely understand their result of their studies or their backtesting. One good a good couple of good tools combined for trading. There's obviously the price profile here, and then you have we have the initial balance vertically, horizontally, and also here is the developing value area, which is today's. This is great for the current day's value area, so you can see how the value is shifting or building, developing, so as the market moves. And then you would use the profile to keep track of the distribution shape. Okay, so as a distribution, obviously this is a session that is already completed, so when we take a look at it, unless you spot out the letters, so you can see the TPOs for each 30 minute, then it's going to be very hard. But you can see that there we had the initial A period, then the B period, and I really could care less how other manufacturers start their lettering, whether if it's with J or B or whatever it is. That is just, there's absolutely no point in that. So use it in whatever way you want. If you want to start it with A, then start this indicator with A. If you want to start it with something else, it really doesn't make any difference. So, but once you decide to start it with A, then always start it with A, just so you always know what A, the first period is A, and then there's B, and then there is C period. So and then there's D period here. So we can see that we started in the beginning. We started to create a little bit of a profile here with D period, which was around this area here. And when we just look at the chart, we can see that the initial balance occurred. We try to move up above yesterday's point of control. We quickly pushed back below it, and so this white line would be the point of control. Quickly pushed below it, and this would be the 4 o'clock, the 1600 point of control, and this would have been the futures point of control. So we can see we couldn't get above the 1600 point of control, and we pushed quickly below that area. We moved out of value low. We came back up and started rotating inside the initial balance. When you just take a look at price action, considering where we are with respect to initial balance the previous day and where we're struggling, we can't move beyond, we can't really test value, developing value high, and then price rotates and moves outside of the initial balance. Okay. As it moves outside the initial balance, it continues pushing lower. And as it pushes lower, now a lot of people use it, there's a lot of different ways you can use the initial balance, but if you just double the initial balance, and you can use the functions provided to create, for example, to double up take the initial balance range and then add it to the initial balance high, or add it to the initial balance low, and so you could use those as profit targets, and we can see uh, that would have made a great profit target, whether if you took the trade as we broke out of it and try to expand the initial balance low towards the downside, or whether you went short in these areas here. It doesn't matter, but you can see that that would have made a good profit target, and then we started rotating back inside, and we went back inside the initial balance, and then we tested the value high and were rejected and closed down here. So a good combination, three good tools that you could combine. Obviously there are other ways you can use the initial balance, and it has a lot of different uses, but I just wanted to show you a couple of good tools that you can combine to get good results from. As you do your research with the context of the initial balance, regardless of which time period you choose, whether if you choose the 60-minute time period, whether you use a 15 or 30 minute or 90 minute or whatever other range period you find, or time period you find as relevant to trading. Obviously pick something that is relevant to trading and there's some rhyme and reason behind it. Typically the first 30 minutes to 60 minutes of trading brings in the most volatility, and that's why a 60-minute initial balance MP users use that. Now those that use the 15-minute or 30-minute, that again, that time period has the highest volume. So and, based on that reasoning, it does make sense. And generally speaking, at 10:30, with respect to with respect to the stock index futures, at 10:30 there is always, between the open and 10:30, there is always an important announcement most days, economic report that is to say. So you can also consider those fundamentals as well, which are going to pop out in the price action or on the chart. So as you do your research with respect to initial balance and what the result of the initial balance is, and you look at price action in the context of initial balance, so you can determine whether if you're using it as a filter for your trend analysis, whether you're using it as a filter for directional bias, whether you're using it as a bias, as a filter or a mechanism to determine your profit targets. You can also use it as methods for determining ranging price action or trending price action with respect to how quickly price moves beyond the initial balance. There's also days where you have the initial balance set, then we go into a consolidation, and then we expand it in the afternoon. With that as a context, I mean, you can grab a lot of information based off of just a simple indicator that pretty much tells you what the initial balance is, and then you can understand different types of price action that are high probability based on the context of initial balance. Okay, hope it helps.